Hey everybody, Todd Jeffries here, along with Chris Waters, Waters International Realty. You doing good?
I am so excited to be here.
Yeah,
It's been a minute since I've been on with you.
I'm so glad that you were the first one that came to mind when we kind of started kicking around the ideas to create this show, where we're talking to experts about, just things that are going on in your field. And before you got here, I was thinking about the technology and how it's affected your business. It's pretty interesting. I mean, even going back to early 2000, with various, big investment firms from other countries coming in and buying properties, that sort of thing, to Zillow, to now to AI.
Yeah, I mean, now these, in the early 2000s, there was Zillow, Trulia, Realtor.com. People were able to access properties for sale on the internet. And, it's kind of a consumer-facing MLS for people to be able to look at properties all over the U.S. And then now, you've got AI integrated where it kind of predicts, what houses might be a good fit for you and emails you a list of homes that might be a good fit for you. And then you've got these, Wall Street funded companies that went up in flames that tried to be sophisticated home flippers and offer people this instant cash offer, and using this algorithm and AI and machine learning to predict home prices. And they, after losing billions of dollars, realized literally billions of dollars, realized that that's not possible.
With all the technology change, is it better for the buyer?
So the way I see technology having a positive impact is it's created a lot of transparency for consumers, that are looking for a home to buy, or they're kind of curious what the neighbors are asking for their home. And it's it's also helped real estate professionals be a little bit more efficient with their job. So, for example, if you're not that great of a copywriter, you can go on one of these AI tools to write ad copy for a listing.
ChatGPT,
yeah. So we actually use one called Jasper. It's more real estate specific. We've been using it for about a year now. And great tool.
And what does it do? It writes descriptions of homes?
That's right. It writes descriptions of homes.
You input a little bit of data, and then it writes a perfect paragraph on that home.
That's right. Exactly.
That's awesome.
Yeah. So we've been using that for about a year. And then, there's some other cool technology coming out. It's been out for a couple of years. They're called self tours. So a consumer downloads an app. They've put in they have to upload a picture of their driver's license. They have to put in their credit card information. They get charged $1, and they have to take a selfie. And they can use this app to open up the lockbox and look at homes themselves without a realtor. And so the convenience of on-demand showings of properties is, kind of one of the latest and greatest things out the last couple of years.
Does that scare you, realtors out there? Does it?
No, I mean, popping the lock is really not the value of us as realtors. Being local market experts, understanding pricing, dealing with, there's so many people involved in a real estate transaction. You've got title companies, homeowners insurance, the appraiser, the home inspector. So there's a lot of different vendors both buyers and sellers have to work with, and you've got to be able to help a client navigate working with each one of those people. And there's a lot of nuances to it, like knowing what points to push on with the home inspection report, like what you should be pushing to get fixed and what you shouldn't. And then, just like things related to the title companies and the survey. I mean, these things sound so simplistic, but I got a call from a guy last week, and he said he found out that the house he bought using some other, real estate agent, the house was built 5 feet over the property line. And so his house is technically on the neighbor's property.
Ooh.
Right.
How do you remedy that?
So you have to go through the county, and you have to replat both lots.
He may have to pay another property owner some money for the dirt.
He might, that is possible. Sometimes you can get a boundary agreement signed between neighbors. The right way about fixing this is working with your neighbor and getting the lots replatted and working with the county.
I wonder how many homes or properties are like that, just scattered all across Texas.
Oh man, they're
just
everywhere.
Old records.
I remember probably 10 plus years ago, East Austin, before East Austin has become what it is today. I went on an appointment, and this home was probably, was built probably in the 40s and 50s. I mean, it was in rough shape. And when we got the survey, the house was built 1 foot. The physical structure of the home was built 1 foot over the property line.
Not just in the easement, but it was on the other property.
It was on the neighbor's property.
Oh man!
So
what a nightmare.
Yeah. So the value of an agent is not just popping the lock. It's navigating the survey, the title company, what should you offer on a home? How much, should you negotiate? Where should you price the property? There's a lot that goes into it. And, there's a reason why these Wall Street funded companies have lost billions of dollars, because it's very difficult to scale, how local real estate is.
There's a few stories in the news this week about interest rates could, going up.
Yep.
With the Fed meeting this week, later next Friday.
Yep.
And at the time of recording this is a Monday, so they may have already jacked up the rates a little bit. The word was a 1/4 percentage point. And then plus you have stories about, fluctuating home sales prices, some kind of leveling off a little bit. But also this thing about the credit score. And if you have a good credit score, and this would be just one of those federal-backed loans, Fannie Mae, Freddie Mac, you'll pay a little bit more to compensate for those who have a lower credit score, as the story says.
Yeah, I mean, if it's like, for example, FHA, USDA, or VA, they have to take into account their losses. Like, what's the total cost of, these high-risk loans? What are the costs of doing business and issuing high-risk loans?
But if you've got a good credit score, let's say 800 plus, 780 plus.
I mean,
are you getting a federally backed loan?
No. If you're a 720, 730, 740 or higher, you're going to go get a conventional loan through a bank, and you're going to get a much better rate than you would through, for example, FHA or USDA. You're not going to have what's called PMI, private mortgage insurance. If you put down less than 20%, you have to get PMI insurance. And that adds a couple $100 a month. And so, for anybody with a decent credit score, and when I say decent, north of 720, 730, they're going to get a good rate, and they won't have to worry about these things.
Where are most people in their credit score? In the fives?
What's interesting is it's no.
I don't know.
Well, I mean, as a real estate agent, you work with people, that are ideally pre-approved for a mortgage, and so when I connect with somebody, if their mortgage, if their credit score is below a 620, the bank or mortgage bank is working with them, taking them through credit repair. I don't know what the general population is, like what the average credit score is for the general population.
Right.
But I would say a majority of transactions, the consumers out there buying homes have credit scores between 620 and 720. That'd be the kind of the average.
What do you make of all these banks and the problems they've been facing? Another one, went under this week. JP Morgan bought First Republic, SVB out there in California. What do you make of all this? I guess it's on some level of uncertainty.
Yeah. I mean, the way it's impacting real estate is a lot of these regional banks, they are changing the LTV or loan to value ratio. So, for example, like, a year ago, you could go get a loan using one of the regional banks. Like in Austin, that might be like Horizon Bank, for example, or First State Bank, or our bank, Nolan Ryan's bank. So some of those regional banks are adjusting their loan to value ratio. So again, a year ago, you could have gotten a loan and only put down 10%. Now they might be asking for 20. So it just depends on what the loan program is, but they're definitely tightening up, and they're requiring a bigger down payment when consumers are going out there to buy a home. Now, the big national banks, like, for example, Wells Fargo, Bank of America, the big juggernauts out there, their LTV ratios for their loan programs are staying the same. But we're probably seeing the biggest constraints is on the land side. So most of the regional banks are the type of banks that are financing, the purchase of like a 10-acre tract of land or a 20-acre tract of land. Another example, a big one in Austin, is Capital Farm and Credit. So that's an example of one where, they're tightening up the loan to value ratios. You got to put down a bigger down payment to buy something.
We were talking with John McClellan not too long ago, and he said one of the hurdles now is the price of dirt. Home builders. We desperately need more homes on the ground. There's a shortage, right? Yep. And home of land prices are slowing some of the builders down.
That was a big problem in 2020, 2021. I mean, it's been a big problem in Austin for a long time. But, we're actually seeing land prices ease up now. So, I mean, again, the greater Austin area, when I say greater Austin, I mean like from Kyle Buda all the way to Georgetown. we've seen land prices on average fall anywhere from 15 to 20% since
that-
last June.
Is
At
it
the
in
peak.
correlation with interest rates going up?
That's exactly
Interest
right.
rates go up,
Yep.
price goes down.
Yeah, so I mean the biggest driver of real estate prices is there's two things. It's one, interest rates, and two, job growth. And so in Austin, obviously, we have really strong job growth, population's on the rise, but the thing that's been kicking everybody in the pants is the interest rates. It was a complete shock to the system to have interest rates go up, 250+% in a 6-month time period. And so the biggest, challenge towards the last half of 2022 was, all these buyers were pre-approved for a mortgage, and then rates went up significantly. And the banks look at something called a debt-to-income ratio. And well, if the, interest rate goes up 1 percentage point, your monthly payment on that house just went up significantly. And then that changes your debt-to-income ratio. So a lot of people got knocked out of qualifying for a home that they were previously pre-qualified for. So, a lot of people have heard in the news about, all these national home builders having like 40-50% of their homes under contract canceled because the buyer doesn't qualify anymore.
We've talked about, how other factors in this real estate market here in Austin, including crime, and the homeless crisis, the fentanyl crisis, all of those things affect the safety of our community, which affects the market.
Yep.
People moving out of, certain neighborhoods, that kind of thing.
Yeah, I mean, I can't speak for. There's obviously certain areas of Austin that are worse than others. It's actually interesting that the areas of Austin that have fared the best since the interest rates spiked have the highest crime, and
really,
and it's because they're the most affordable in the whole city.
People are buying them.
Yeah, so
that's what they commonly call gentrification, right? I mean,
if you, I'm not telling anybody anything that you
Sure.
don't already know. Any police officer, if you ask them where the most number of calls are, it's either off Breaker and Runberg or somewhere, east of Stasny 935. That's where they say the most number of calls come from.
And picking up an investment property in those areas is very affordable.
Those are some of the most affordable areas to buy real estate. I mean, if Runberg and Breaker, 10 years from now, that area is going to be worth a lot of money. I mean, it's close to the Domain.
East Austin has changed. Over the past 5 years alone, it's just dramatically different.
East Cesar Chavez, East 6th Street, that whole
7th
area.
Street, all down there.
That's already changed. So I mean, the next two quadrants of Austin that change significantly are going to be that east of Stasny area, east of 35, and then Runberg and Breaker are just going to continue to change.
And when we say change, what are we talking about? Some people listening, they may have haven't been driven in that part of town in a long time, but there's new restaurants, there's new apartment communities, new condos.
Yep, new developments.
It's much cleaner than it used to be.
So much cleaner. And so the houses are being torn down. They're doing new construction homes. I mean, for example, these two pockets of Austin, they were heavily, developed in the late 60s and 70s. And so, a lot of people are going in there now, knocking the house down and putting up something new.
Where do you see the market going in the next 2 years? I know that's hard to predict.
Honestly, my crystal ball says Austin pricing is, going to be stagnant through the rest of the year. So what's interesting, just let me back up for just a minute. So I talked about how real estate prices in Austin have come down 15 to 20% since the peak of the market in June. That happened literally between June and December. And a lot of people aren't really talking about that yet. And so the price reduction has already happened. And when you'll see a lot of these front page articles about call it the hit Austin's taken on pricing, is going to come when they start reporting year over year numbers.
It's going to show a dramatic decrease.
Huge decrease. Wait till June.
But month to month, it's not that bad.
That's right. Month to month, it's not that bad. Granted, if you did look back the last half of last year, the month to month pricing change was pretty significant.
That's interesting because the Austin Board of Realtors, they're going to come out with a report soon. And it's probably going to show a drop of 30% maybe?
Well, so
maybe not quite that much.
So again, the decline in pricing we saw was from June to December of last year.
Right.
And so the macro news wasn't really reporting on this massive decline in pricing that happened between June and December.
Yeah.
And so the news, just in the past couple of months, has started picking up on what has already happened. Prices already went down in Austin, and now pricing's pretty stagnant. And that's what I expect the rest of the year to be. But when you hear the news come summertime in June, you're gonna hear the year-over-year price depreciation, and that number is going to be huge.
What is that?
But the truth is, it already happened.
What does that impact? Just that word alone, just getting that word out there. What is it? I would think if you're in another part of the country, you would immediately hear that and you go, wow, prices have dropped 20-25% in Austin.
Yeah, so what's wild is like I think that anybody listening to this knows Austin over the long term is going to do really, really well. And so, I for anybody that owns a home in Austin, and if you're going to be in that home for any length of time, 5, 10 plus years, like you're going to be fine. But if you are in a position where you need to sell, like you are not going to sell for anywhere near what you were going to sell for last year in June. You're not. And for anybody thinking like, oh, I'll just wait it out. Well, we're not going to probably get back to those pricing that we were at the peak of June of 2022 for probably 2 to 3 years. I mean, we have a lot of stuff we're facing. We're facing really high rates. The Fed's going to be probably conservative about, reducing rates when they start reducing rates. When they start reducing rates, it's probably going to be a function of job loss, right? And then that doesn't fare well for real estate prices. So the next couple of years, my expectation is we'll continue seeing population growth in Austin, but pricing is going to be stagnant as a result of the headwinds we're facing here in the greater Austin area.
Those prices are not going to change until interest rates come down.
Interest rates have got to come down, and the other thing you got to take into consideration is jobs, right? Are we going to see a lot of unemployment as as we start seeing more and more turmoil in the market?
And we're starting to see that technology jobs start to really come back here in Austin, right? We got you got Apple, you got several companies along Palmer and Ronald Reagan Boulevard, out in Taylor and Samsung. Those places really haven't begun hiring yet. But they will soon.
Yeah, I think the biggest opportunity for Austin is probably the Samsung plant from a job growth perspective. But I mean, companies like Facebook, Google, several, including Tesla, I mean, they've pulled back jobs pretty significantly. And so it's probably going to be a while before they, bring those jobs back. I think probably one of the greatest secrets in the real estate market right now is the climb in vacancy in the commercial real estate space. There are, these massive
that's a big deal.
Leases that these huge companies have taken down, and they're just like trying to let them go and get rid of them.
And we're in that window when they begin to renegotiate some of those terms. And if they can't get employees back in the building, why would they want to read? You know what I mean? It's going to affect a lot of things.
Yeah, I
that's a big secret. It's a big dirty secret. It's the commercial real estate, especially the rental of commercial real estate.
That's right.
Yeah.
In real estate, the commercial real estate side, the prices are really sticky, so they don't go down very quickly. And the property owners will be real disciplined about like waiting out the market if they think it's going to be something short term. But vacancy has been rising and rising, and commercial real estate prices haven't fallen. So I think we're going to see a big decline in commercial real estate prices in the Austin area. But on the residential front, we've already seen the decline. The decline happened last year, and now prices are going to be pretty stagnant for the next 2 to 3 years. They could go down some more if we see a bunch of job loss.
Let me ask you this. I read an article in Bloomberg News a couple of weeks ago about all the big expensive high-rise condos in Manhattan. Big high-rise condo buildings, 40, 50, 60 stories tall. And most of the units are purchased, but they're empty. Is that happening in Austin as well in some of our big high-rises downtown? And why would that be? Why would somebody invest and buy a multi-million-dollar apartment and not live it? Is that something to write off as a loss maybe?
Well, I can't speak to Manhattan. I can tell you in Austin that the condo developments in Austin are, the occupancy rates are very high. So they're not, heavily leased out or used as investment properties. I mean, there's obviously a percentage of them that are, but a majority of them are owner occupants or people use them as secondary homes. So that's really not the case here in Austin. I did hear a funny story in New York City about investors going in and buying condos in the Trump buildings and then getting the name of the building changed. And when they changed the name of the building, the prices went up. I hate to say this, but
they wanted to change the name away from Trump because they hate him so much, and then it inflated the prices.
That's right.
When they got...
I mean,
that backfired.
Yeah,
that's awesome.
So apparently, again, I'm not a Manhattan real estate guy, but the prices of the Trump buildings, I guess, are at really discounted prices right now, and so investors have been going in, buying them up, and then changing the name of the building.
Interesting. Yeah. That's great. How can folks find you, Chris?
I think the best thing is go to our website, ChristopherWaters.com.
That's with 2 T's, right?
Yep.
Okay. That's what I hear on the radio.
Hey, I'm going to tell you about something really quick we're doing that's really innovative. We came up with this new program where when a seller meets us, if they want to get access up to 85% of the equity on their property, we can do it immediately. And so we're basically giving them the opportunity to get paid twice. So the way it works is we give the seller up to 85% of the equity in their house. We deduct commissions and closing costs from the 85%. And then they can take the cash, pay off their mortgage, they can move, make an offer on their next house. We list it, and then when we sell it, we give them the remaining 15%.
That's great.
Yeah,
That's great because that next home they want to move into may disappear
that's right. Yeah.
if they're waiting for the money.
Well, but one thing about homes disappearing, houses are taking longer to sell now than they
Okay.
were. The average days on market has gone up pretty significantly in Austin.
It's still pretty good.
It's still pretty good. Yeah.
Yeah.
I don't want to be a Debbie Downer here. Homes are still selling, and it's still considered a really healthy market in Austin. It was just it's just been a dramatic change from what we saw back in 21 and 2022. So again, irregardless of what's going on in the market, one of the biggest pain points most homeowners have is all the equities tied up in their home. And when you go to buy another home, you have to make a contingent offer. And your ability to negotiate a good deal when it's a contingent offer is gets crushed. You're going to pay full price if you're going to submit a contingent offer. And so this gives people the ability to, not have that restriction around.
They
their
have
necks.
cash in hand.
They have cash in hand. They don't have to write a contingency offer. The other cool thing is you don't have the headache of having to deal with showings. Not that I'm kind of jaded here. We've tried to facilitate showings for our clients where it's not super inconvenient. We try to get them all scheduled within a tight time frame, but still, you got to keep the house looking nice or whatever. And so, when you take advantage of the get paid twice deal, you can move out of the house, and we can show the home at any time. You don't have to keep it looking like a model home, and you can be hanging out, enjoying your weekends at your new house, and then we're getting your old house sold.
That's great. That's great. Christopher Waters with 2 T's, ChristopherWaters.com.
Yep.
Hey, thank you.
Yeah.
Appreciate you.
Yeah, man.
All right, man. That was good. I think that was.